Hey everyone, welcome back. Today we're talking about something with serious global ripple effects, India's potential crypto ban, and what it means not just for the country's 20 million plus crypto users, but for the entire future of Bitcoin in Asia. This isn't just another regulatory tweak. If India follows through, it could take out one of the biggest crypto markets on the planet. So what's behind the ban? What's really at stake? And what could this mean for the average investor, the regional tech scene, and the global crypto ecosystem? Let's unpack it. First, what's happening? India is once again considering a full-scale ban on cryptocurrency. That includes trading, mining, holding, and even using crypto assets like Bitcoin and Ethereum. It's not law yet, but signals are flashing red. The government has made multiple public comments hinting at a tougher stance, and insiders say a sweeping bill could be reintroduced in Parliament. India's central bank, the Reserve Bank of India, RBI, has long viewed crypto with suspicion, calling it a serious threat to macroeconomic stability. Finance ministry officials have echoed that concern, warning that decentralized digital assets could be used for illicit activity, tax evasion, and capital flight. Their answer? Ban it and promote their own central bank digital currency, CBDC, instead. This is coming on the heels of already harsh crypto policies. India currently taxes crypto gains at a flat 30%, higher than for stocks or mutual funds, and imposes a 1% TDS on every trade, making short-term investing nearly impossible. Trading volumes have already collapsed, but a full ban, that's a whole different level. Why does this matter? Because India is a crypto powerhouse. We're talking about the second largest crypto user base in the world. Not just retail investors, developers, founders, exchanges, and fintech innovators are all here. A ban wouldn't just be a legal footnote. It would gut an entire industry. And it wouldn't stop at India. Asia is watching. If the world's largest democracy declares crypto off limits, it sets a precedent. Countries like Bangladesh, Pakistan, Sri Lanka, and even Indonesia, which are still undecided or soft regulating crypto, might follow India's lead. That could wipe out a huge chunk of crypto's growth market. What's driving the push for a ban? 1. Regulatory fear. The Indian government doesn't fully understand how to regulate crypto, so banning it seems like the safe choice. Officials are worried about scams, volatility, and capital outflows. But instead of writing clear, enforceable rules, they're considering shutting it down entirely. 2. Central bank power. RBI has a vested interest in keeping control over money. Crypto undermines that. With a digital rupee, e-rupee, rollout underway, the RBI sees decentralized currencies as competition. In their ideal world, all digital transactions happen within the central bank's framework. Bitcoin, by design, says no thanks. 3. Political calculations. India's ruling party, the BJP, is walking a tightrope. On one hand, they want to be seen as modern, forward, and globally connected. On the other, they want strong control over finance and a made-in-India digital ecosystem. Crypto doesn't fit neatly into that narrative. And with elections always around the corner, nobody wants to be the one who allowed a future financial crisis. Who gets hurt if the ban happens? Everyday investors. Millions of Indians, many of them young, first-time investors, have put their savings into crypto. If the government bans it, those assets could become worthless or worse, illegal. Exchanges would shut down. Wallets might be frozen, and people with no bad intent would be penalized alongside scammers, startups, and builders. India has a thriving crypto and Web3 startup scene. From Polygon to CoinDesk to hundreds of smaller dev teams, Indian talent has helped build major global crypto infrastructure. A ban would trigger an exodus of talent and capital to countries like Singapore, Dubai, or the UK, places with clearer rules and better incentives. The Indian economy. Let's not forget, crypto is part of the future digital economy. Payments, contracts, lending, asset tokenization, all of it is tied to blockchain. If India bans crypto, it also cuts itself off from a major wave of financial innovation. That's not a smart long-term play. Will a ban even work? Short answer: no. Crypto doesn't run on national borders or government servers. If India bans it, activity won't stop. It'll just go underground. People will switch to peer-to-peer, P2P platforms, offshore wallets, and decentralized finance, DeFi tools that don't need centralized exchanges. You'll push it out of sight, but not out of reach, and that means no taxes, no consumer protections, and no visibility for regulators. We've seen this before in Nigeria, China, and even during India's own 2018 crypto ban, which was overturned by the Supreme Court. Each time crypto survived, it just became harder to monitor and more dangerous for users. What does this mean for the region? India's move will have a ripple effect. Countries across Asia are still trying to figure out how to handle crypto. Some, like Japan and South Korea, have built strong regulatory frameworks. Others, like Vietnam and Thailand, are still experimenting. But make no mistake, India is a leader. If it bans crypto, it signals that crypto is incompatible with responsible governance. That's a dangerous message. It risks turning Asia into a digital walled garden, even as the US, EU, and Gulf countries raced ahead with innovation-friendly policies. What should India do instead? Ban strategy. If India's goal is to protect consumers, prevent crime, and promote financial inclusion, banning crypto is the worst option. Here's a better one. 1. Create a clear, modern regulatory framework for crypto exchanges, wallets, and assets with proper KYC, AML, and tax guidelines. India needs to stop treating crypto like a legal gray zone. A formal regulatory framework would bring legitimacy and structure to the industry. That means requiring exchanges and wallet providers to follow Know Your Customer, KYC, and anti-money laundering, AML, protocols, just like banks. It also means setting clear rules on how crypto is taxed, declared, and reported so users aren't blindsided by penalties. A stable regulatory environment would protect consumers from fraud, attract legitimate businesses, and ensure the government gets its share of revenue. It turns chaos into clarity and speculation into strategy. 2. Support crypto education and awareness to prevent scams and bad investments. One of the biggest risks in crypto isn't the tech, it's ignorance. Many new users get caught in pump and dump schemes, fake coins, or shady exchanges because they don't understand the space. India should invest in public education campaigns, curriculum modules, and community outreach to promote financial literacy and teach the basics of crypto, wallets, risk, and security. Just like we teach people how to use online banking or UPI, we need to demystify blockchain. Informed users are safer users, and they help build a healthier market that benefits everyone. 3. Regulate stablecoins, DeFi, and token offerings through sandbox programs before going full scale. Crypto is evolving fast, and regulators need room to experiment. Instead of rushing into bans or blanket approvals, India can use regulatory sandboxes, controlled environments where companies test products under government oversight. Share this if you think more people should understand what's at stake. Bitcoin isn't just a coin. It's a test of how we think about freedom, technology, and global competition. The decisions made today will shape the next decade.